Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin / cryptocurrency update for December the 3rd. So first things first, before I jump into this video, please do me a huge favor. Go ahead and hit the thumbs up button, and don't forget to subscribe to the channel. Also, if you haven't checked out the trading course, the Cyber Monday special is going to be ending at midnight, so that's about 11 or 12 hours from the time I'm shooting this video. So you might want to scoot over there and check it out. Again, all the videos are being shot. They'll be done over the next week or so. And if you want to get a walkthrough through the members area, it's at the beginning of yesterday's update video, so you can check that out. Okay, but I don't want to make these videos all about pitching. So let's talk about content instead. So the first thing I want to address today is this weird thing that's come back around on Twitter, where some of these permabulls are basically telling people that they should be getting ready to go long because the 50 moving average on the weekly is about to cross the 100 moving average on the weekly. Well, first things first, they haven't crossed. So trading on a maybe is ridiculous, and it's not trading, it's gambling. But number two, even if they do cross, they mean absolutely nothing. The 50 crossing the 100 is not a golden cross. A golden cross is when the 50 crosses the 200. And as if that wasn't enough, if you go back in history, this has only occurred one time ever since Bitcoin's inception, and it was back here in the summer of 2016. So they're trying to cling to this thing that, oh look, this crossed, and then the very next week Bitcoin started to pump. Yeah, just one problem. That was also right when the halving took place. So I'm gonna call bullshit on that. Has nothing to do with these crossing. It had to do with the halving back then that created a pump, and because it pumped, it caused them to cross. It was not a cause, it was an effect of a pump that was already going to occur. All right. That also happened after a prolonged period of consolidation. You see this? This started to consolidate. It had a move up in consolidation from December of 2015 all the way to the summer of 2016. So for somebody to tell you that, hey, we went through distribution and now we're in the markdown phase, but suddenly the markdown is going to abruptly stop and Bitcoin is just going to start shooting right back up. No, folks, that's not how that works. Okay. Now it could go back up. I'm not going to sit here and be arrogant and say it can't go up no matter what. But if it does, it will have absolutely nothing to do with this nonsense, made up, quote unquote, golden cross. It's bullshit. Remove it from your mind, okay? Anybody telling you that, you need to stop following them. Point blank, because they're making stuff up to support their bias, okay? And there's a couple of really big guys on Twitter who I used to think were legit traders because they did so well in the bull market, but after seeing how they've handled the bear market, I realized that they're nothing but luck boxes, right? If you always go long in a bull market, of course you win. Well, they've been longing since June in a bear market. They just keep longing, and they just keep coming up with new excuses. First it was, oh, we're above the 50 moving average, it's fine. Oh, we're above the 100 moving average, it's fine. Oh, we're above the 200 moving average, it's fine, right? They just kept changing it, and now they're just making stuff up. It's ridiculous, okay? They're going to get you wrecked if you listen to that crap. Enough about ranting about moving average. Let's talk about the chart, and let's go ahead and step back into reality and take a look at some of the possibilities that might occur here. So the first chart that I'm going to look at is my handy dandy 3-day chart, okay? If you guys have been watching the channel a while, you know this thing has been almost like a crystal ball. So much so, in fact, it's a little bit freaky, right? Once we got inside of this box, this thing just became a money printing machine. So we came down, we tagged the bottom just like we did in these two places. We found support, we bounced. We came up, we tagged this resistance, and of course we had this drop. So now we've opened a new 3-day candle. This candle opened nearly 24 hours ago, about 21 hours ago, 20 hours ago, whatever it was. 19 hours ago, right? So we're in a new 3-day candle. So we can't really put too much stock in this last little movement of this leg because it hasn't closed yet. This is where the last candle closed. And if you look, that's suspiciously close to where it closed back here. So when I look at just price action, it looks like it needs to dip a little bit and then move up. But when I look at the 3-day RSI, almost makes me think that we're actually like right here in this fractal, right? Meaning that we might have a little pump here to shake out some late bears and then finally have this leg down that I'm expecting. And remember, this next leg down, I'm not talking about a huge drop to 5 grand or anything like that. I'm talking about a leg down to, possibly 6,000 or possibly down around 6,900, and I'll show you why in just a second. But on the RSI, that would bring this up a little bit, maybe up to this area, okay? And then that next leg down might take us down to the bottom of this box again, okay? That's what I'm looking at on RSI. Now, why 6,900? Here, this is why. This is a daily chart. Of course, this is our big downtrend that we've been in, all along. If we go down to 6,900, okay, what we would essentially do is test the close over here from November 24th, and we would put in, if you're not seeing it, we would put in a W, okay? Now, a W is bullish structure. Okay, let me rephrase that. We would put in a W if we go down and then move up, right? We'd have to break the neckline for it to be a W. But if we go down there, it would look like an unconfirmed double bottom, and I would expect a bounce, okay? What's interesting about that area is it happens to be right inside the golden pocket, okay? So that would give strength to that bounce. This is where I would expect some type of bounce like this. Not quite this crazy, but a strong move up. A strong move up, if we measure from the top of our last move to the bottom here, swing high to our swing low, look at this. The 61.8 fib, I've talked about this in many, many videos now. Right up in this area, so that's the golden pocket for a short, happens to line up almost perfectly with the downward channel that we've been in for 5 months, and that lines up perfectly with this old level of support flipped resistance. So I'm really, really interested in this area up here. What's going to be a little bit strange is how it acts when it gets there. I would be looking for shorts right now unless something changed. But the reality is this is bullish structure. If this comes to pass, it would be bullish structure. It is happening in the long-term 61.8 golden pocket. So could this be the bottom? Yeah, it absolutely could be the bottom of the bear market. Do I think it's going to be the bottom? No. Okay, but could it be? For sure, right? But again, it's not because the 50 is going to cross the 100. It's because if this happens, that's bullish structure. All right, so if this happens and there's a good setup here, I might look to go long and try to catch a reversal on the trend and ride it up. And I would be selling, taking profits up here and flipping short, because even if this does turn out to be a bottom down here, it will be very likely that this would then come back down and retest the breakout, right? Retest this neckline, all right? Or it could be, something more like this, where it bounces up here and then gets a retest of the neckline and then, goes up from there. And if we had something like that, I would be much less inclined to automatically short when we got up here. I'd have to take a very hard look at it, okay? Again, I don't expect that's going to happen, and I'll tell you why, because we're in a bear market, guys. We are definitely in a bear market, and normally after a bear market, what you get is a period of consolidation where the big players start to accumulate the asset all over again, okay? So for us to suddenly just go back up like that would be a little bit odd, and it would be a little bit out of character for an asset, right? When you get a drop to the 61.8 golden pocket and a move right back up, you're normally in an uptrend, right, where it's just a quick correction and then you continue the trend. But we're not in an uptrend, we're in a downtrend, okay? So it's very important to understand the difference and understand why the 61.8 isn't automatically this golden area that it may be in an uptrend. So that's the daily chart, okay? Again, we know that how that would look on a 3-day chart. If we drop down, RSI might come down to this area. And then, of course, if we tag up, right, if we move up, what I would be looking for is for RSI to get back to the top of this box. So again, could be a golden opportunity to short Bitcoin if that comes to pass. So another thing I wanted to take a look at today was this chart, this market cycle chart. I redrew this a little bit, and I'll tell you why. Because when I drew this originally back in August, I was thinking that we were in anxiety back here, and we very well may be, right? That may have been anxiety, but I'm almost wondering now if maybe anxiety wasn't back here, but that this pump back in October was actually anxiety. And if so, then we could get something like this, right? Again, if you look, that would be a W back up to that $8,800 to $9,100 area, somewhere in there. And then what's followed after denial is the panics, right? Boom, panic phase. Of course, panic could take us down to around 4,100. These are just ballpark numbers, right? Maybe that takes us to 4,100, fills in this old liquidity gap, gets a dead cat bounce, takes us down to fill in the old gaps down around 3,500. That would be anger. And then maybe this thing grinds sideways throughout throughout 2020. And maybe we actually see, a new low by the end of 2020. And maybe our next bull market actually kicks off in 2021, right? Which would throw everybody for a loop because, of course, they're all clinging to the narrative that we have to go into a bull market next year because of the halving, right? Well, halvings have less impact each time because, it's less and less important, right? When you're cutting from, 50 to 25, that's a much bigger difference than cutting from 25 to 12.5. And honestly, I don't even know what it's cutting to this time. I haven't paid that much attention to it. Again, I just don't put that much stock in the halving, right? I think that everybody's been talking about it now, really since 2017 is when I first started hearing about it. And that's a long time. That's almost 3 years that people have been talking about this. I think it's already priced in. I truly do think it's already priced in. I do not think the halving is going to be anything like what people think it is. I think the halving this time is going to be more like the halving in Litecoin, right? And just in case you're not sure what happened with Litecoin, I had all kinds of stuff posted about this. One of the reasons that I was able to do so well on my Litecoin trade this year were, I accumulated the last bit of Litecoin back here, and then I sold at an average of like 127. It's because I knew what happened the last time Litecoin had a halving, right? If you look at this, Litecoin's halving, when was it? I don't even know. What, back in June, May, June, something like that, right? Anyway, since then, it's dumped, right? I mean, look at this. From the top in June to now, it's down 68%. That halving did not kick off a bull run for Litecoin. And if you look, go to find one with enough history, we'll just use Bitfinex. I don't remember when the last Litecoin halving was off the top of my head. I'll be able to tell when I look at a chart. Here it was right here. All right. So it had shot up. Here was the halving. Boom. And it had this huge run up. It actually front ran it. The halving was back over here somewhere. I believe it was in August. And look at what happened, right? Price collapsed. It ran up before it and then collapsed. And I think that's what we just saw with Bitcoin. I think this was our, April through June rally. I think we front ran our halving. And now I think we're doing this, right? And if you look at Litecoin, what happened after that, it consolidated, right? It consolidated for months and months and months. The halving was, I believe, in August of 2015, and it consolidated until April 2016, and then it finally had a little, pump, but still more consolidation. It really didn't start to move up until about a year and a half later, and then it skyrocketed. So again, I think it's entirely possible that our bull market's not going to start until 2021. Now, if you ask me, James, do you think that there will be a bull market? Absolutely. Absolutely, I believe there will be a bull market. Will it take us to new all-time highs? That's impossible to say, right? We just have to see what effect futures have on the market. We don't know how high it's going to take us. It doesn't matter, right? You're playing it with even a little bit of common sense. It's very difficult to lose money in a bull run, okay? Unless you're trading on leverage and getting stopped out and, stupid stuff like that. But yeah, I think that we probably are, in for a lot more consolidation before any type of large move up. And until we break out of this downtrend, there's really no reason to be talking about bull markets. Okay, there's just no reason to be making things up like imaginary golden crosses that don't exist in real life and nonsense like that, right? After a big move up like this, you get distribution, which we got, and then you get a markdown, and the markdown typically takes you back to the mean, right? In this case, that would be back down here somewhere, right, on this green line, which again lines up with this liquidity gap. So it's entirely possible that this bear market is not as bad as I suspect it might be, and that we do put in a bottom, sometime in early 2020, right? Maybe down here around this line where it converges with this liquidity gap. Maybe we do put in bullish structure here, and we move back up. I wouldn't say that much, but then we start to move back up, right, into the halving. That would make sense, and I believe that's a narrative that has some basis in reality. I don't believe that this narrative that we're going to bounce and suddenly start skyrocketing in December of all months is valid. If you guys are new to crypto, if you haven't been trading crypto a while, let me explain what happens in December. People start taking out profits to pay taxes, okay? They take out profits and they pay their taxes. How do they take profits? They sell Bitcoin. What happens when you get a lot of selling pressure? Price moves down, okay? Also, what happens in January? That's the Chinese New Year, right? Historically, Bitcoin has not fared well during that January, right? During January, historically, Bitcoin has struggled. I'm not saying we won't move up. I'm just saying that I don't think it's going to be the start of a bull market. Like, there's never been, this is the oddest thing. A lot of these people want to use history to support their bias. Oh, well, the 50 crossed the 100 one time and this happened. But historically, there has never been a bull run that started in December. Never. Okay? I mean, if you go back in Bitcoin's history, never has December been the start of a bull run. I mean, again, it's just ridiculous, right? We don't start bull runs in December historically. Again, doesn't mean it's impossible, but what I'm saying is you can't pick and choose which history you want to use. Oh, well, this history fits my bias. I'll use that history. Oh, this history over here, this doesn't fit my bias. I'll ignore that history, right? It's just nonsense, right? So it's very easy to see if you're looking at a monthly chart. This was a small uptrend, and this was a downtrend. And it's very easy to see, again, I talked about this yesterday, in the bigger picture, this was all one big bear market, right? People are saying, oh, we can't have two bear markets back to back. Well, see, that's where they're confused. This isn't two bear markets back to back. This is one bear market. It's not two different bear markets. It's not, okay, here was one bear market, this was a bull market, this was a bear market. No. It was one giant bear market that we're still in, and this was a relief rally, okay? So now we're going to move down. That's just how it works. I mean, I don't know for sure that we're going to go lower in price from 7,300, but I'm saying that generally speaking, back here, this is why I was shorting Bitcoin, because after, you know, a relief rally, you keep your trend intact. It's just, I don't know, guys. I just have so much trouble understanding where these people are coming from. And the only thing is I can figure is the more bullish you are, the more followers you get, and the more followers you get, the more stuff you can sell. I'm truly convinced that there are very few actual traders on CT, right? On crypto Twitter. That's what CT is. Boggles my mind, okay, the way that these people will lead new traders and, you know, people who don't understand this stuff off a cliff. So here's what I'll tell you guys. Be patient, right? Look for setups. Don't chase this thing. It's entirely possible that we have bottomed. I don't think so. It's entirely possible that we're going to go to 4,100. It's entirely possible we're going to put in new lows. You don't want to be the guy or the girl that was buying Bitcoin at $7,000 saying, oh, well, it's okay, I'm just cost averaging, and then find out that Bitcoin goes to $1,000, right? You don't want to do that. Trust me. Been there, done that myself. It's not fun, okay? Let's take a look at altcoins real quick. We'll take a look at the total market cap. Same story, guys. Don't really want to beat a dead horse. Trapped in the same range. Nothing has really happened. Nothing that says short it. Nothing that says long it. Let's look at Litecoin. I just like Litecoin because it's kind of one of the majors. That's what we got here. Same deal. Trapped in a range. Looks like it's come in. Found support in this line, right? Somebody was trading the support. They could have made some good money today. Whoa. Look at that. Wow. Yeah, if you traded that line, I mean, it would have been tough. There's no real setup there. Oh yeah, there was. Look at this. This is an hourly chart. Look, you could have looked for a long right there for sure. You had the price making lower lows on the hourly. You had it making higher lows on RSI. That's bullish divergence right there in the close of that candle. I could see an argument to go long there. Check this out. Wow, that's like 3.8% move. You probably wouldn't have got the whole thing, but you know, maybe if you closed it after this candle had this huge crazy top, still like 2.6%. Really good. Would have been a really good day trade. What time was that? It was 5 a.m. I went to bed at 5 a.m. Bummer. I don't trade Litecoin anyway, not during a bear market, but if I did, would have been pretty awesome. But yeah, it just looks like more relief, right? It's not actually breaking above any key resistances. It's just ranging, which is the same thing that Bitcoin is doing. It's just ranging. So look at EOS real quick. What is this, a 1 hour chart? Let's look at a daily. Same deal, right? If we draw a horizontal line, looks like it was going to break above it, but just fell right back underneath it. What else we got? Ethereum. I think Ethereum's been moving differently than Bitcoin. I haven't looked at it in a couple of weeks. No, guess not. Okay. More of the same, right? Yeah, resistance up here. Resistance right here. It hasn't made it to either one of those. This looks terrible. So it basically came up to test these lows and is moving down more. So yeah, no good. Okay, well, that's enough alts. They look like crap. Okay, I'll go back over to Bitcoin real quick. I'll show you guys something that's kind of funny. So a lot of people, you know, have taken credit for calling bottoms and calling this and calling that, and guys, calling the bottom in a bear market. There's one indicator that I use that, you know, a lot of people look at RSI and they're like, oh, RSI is for new traders. That's nonsense. People that say that kind of stuff don't know how to use RSI properly. They try to, what they're doing is saying, oh, you can't, you know, base it on oversold and overbought, and you can't, right? That's not what RSI is actually for. But the one thing that I do find ironic is if you put Bitcoin on a weekly chart, every single time it's ever gotten oversold on the weekly, it marked the bottom. Oh, I should have used BLX. It has more history. Check this out real quick, and then I'll wrap the video up. So this is a weekly chart of Bitcoin. Go all the way back to the beginning here. Right here, it touched the oversold territory, just touched it, right? That was around 319. It bounced up to 481, so that was like, what, a 45 to 50% pump. Right here, it went actually into the oversold territory, didn't just touch it. Right here, it's 30.36, so it wasn't actually oversold. But right here, it was oversold. It closed 27.7 RSI. And look what that was. That was the bottom. See that? That was the literal bottom of the bear market, January 2015. If you bought on that candle, if you bought on the bottom, would have been right around 160. If you bought on the close, would have been right around 211. What an awesome place to buy. And then if you waited and waited and waited until it got into oversold again, it got oversold the week of December 10th. And if you bought there, again, it was the literal bottom for Bitcoin. You would have been buying at 32.22 on that close. Again, pretty good place to buy. So the reason I'm bringing that up is not because you want to use that and be like, okay, well, I'm automatically going to buy if it gets there. I would definitely say that if it gets there, you should be looking for setups, looking for reasons to go long, not just jumping long, but looking for reasons at least. But what I'm pointing out is anytime Bitcoin has been in an extended downtrend, it has always reached the oversold territory on RSI. And we're nowhere near oversold. We're still sitting at 42 on the weekly, which means this thing has a long way to go before it's oversold. And if you don't understand RSI, one of the things about RSI is typically 50 is the line in the sand. Anything above 50 is showing strength. Anything below 50 is a sign of weakness. Well, guess what? We're at 42, which means that we're in weakness. And a bull trend, you almost never see prices below 50. See this? The strong uptrend right here? Look at this. RSI never dropped below 50. But yeah, we are back under that line. And anytime that Bitcoin has went under that line in the past, you can see that it's taken a long time to get back above it, right? Back here is a little shorter. But even that was from August of 2011 to May of 2012, almost a year underneath that line. So if we have a year under it and we broke under it in September of 2019, it's going to be late 2020 before we break back above it if we're using history, right? And again, we can't pick and choose which history we use, right? This isn't like the 50 crossing the 100 where it happened one time. Happens every time, right? And again, still not a reason that we can't just base it and say it's going to happen for sure, because let's be honest, 10 years isn't a lot of history. Okay, it happened 3 times. It's not exactly like rocket science. But yeah, I suspect that we are going to move sideways. I suspect that we are going to go down, and probably at some point this weekly is going to touch that oversold area. And when it does, that's when I will personally be like, okay, it's time for me to start looking for some really large, long positions. Okay? Video's long, guys, almost half an hour. So I'm going to wrap it up there. Please remember, I'm literally some guy sitting in a spare bedroom. Nothing in the video is financial advice. Nothing in the video is trade advice. You should always do your own due diligence before making any type of investments. If you haven't already, be sure and give the video a thumbs up. Also, don't forget to subscribe to the channel. And don't forget, if you're interested in joining the trading course, the Cyber Monday discount ends at midnight tonight Central Time. All right, this is James with Crypto Common Sense. Trade safe.